Relocating to a new city or province within Canada can be an exciting adventure, but it also comes with its fair share of expenses. However, there's a silver lining for those who are required to move for work or school. You may be eligible to claim moving expenses on your income tax return. Understanding the tax considerations when claiming moving expenses is crucial in ensuring you're in compliance with the Canada Revenue Agency, CRA, and maximizing your deductions. In this blog post, we will outline the essential aspects that Canadians need to consider when claiming moving expenses on their income tax return. Before diving into tax considerations, it's important to determine if you're eligible to claim moving expenses. According to the CRA, you can claim moving expenses if you meet the following criteria. You moved within Canada to work, run a business, or attend a post-secondary institution on a full-time basis. Your new residence is at least 40 kilometers closer to your new workplace or post-secondary institution than your previous residence. You earned income at your new location, employment or self-employment, during the tax year when you moved. If you meet the above criteria, you may be eligible to deduct eligible moving expenses on your income tax return. Once your eligibility is established, it's essential to identify which moving expenses are eligible to be claimed on your income tax return. The CRA allows deductions for a variety of expenses related to moving, including transportation and storage costs for household items, travel costs, such as vehicle expenses, accommodation, and meals, temporary living expenses for up to 15 days, cost of canceling a lease at your old residence, real estate commission and legal fees related to the sale of your old residence, mortgage penalties incurred due to the sale of your old residence, utility connection and disconnection fees, cost of updating your address on legal documents such as your driver's license or vehicle registration. Note that certain expenses, such as home renovations, loss on the sale of your old residence, and pre-move house hunting trips, are not eligible to be claimed as moving expenses. You will need to complete the Form T1M, Moving Expenses Deduction, to claim your moving expenses on your income tax return. The amount you can claim is limited to the income you earned at your new location during the tax year when you moved. You can carry forward any unused portion of your moving expenses to the following year if your income was not high enough to claim the full amount, but you must use this amount in the following tax year. Keep in mind that you cannot claim moving expenses if your employer reimbursed you for them, or if they were included in a lump sum payment as part of your relocation package. However, if the reimbursement is indicated on your T4 slip and included in your employment income, you may be able to claim the moving expenses. When claiming moving expenses, it's crucial to have proper documentation and receipts to substantiate your claim should the CRA request them. Ensure you keep all receipts and documents related to your move, such as invoices and receipts from moving companies, gas receipts, mileage logs, or receipts for moving truck rentals, receipts for meals and accommodations during your move, documentation for real estate fees and legal fees associated with the sale of your old residence. Keeping organized records is imperative in case the CRA conducts a review of your income tax return and requests supporting documentation. In conclusion, understanding the tax considerations when claiming moving expenses is crucial for Canadians who have relocated for work or school. Ensure you meet the eligibility criteria, identify eligible moving expenses, and keep proper documentation to substantiate your claim to maximize your deductions and stay in compliance with the CRA. Remember to consult with a tax professional if you have any questions or concerns about your specific situation.